Hello, everybody. This is Tchaikovsky, and welcome to yet another intermediate accounting video. Isn't this exciting? No, I love doing this. So, a few things before we get started. My disclaimer and copyright notice is that the information and opinions in this presentation are those of yours truly and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. Presentations for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2026 by Bennett Tchaikovsky, all rights reserved. Any distribution is strictly prohibited. Throughout the presentation, I'll make reference to publicly available information that is the copyright of other parties. I do not claim any right to the copyright that I reference of those third parties. Okay, so what we're now going to be looking over here is at an example of a change in accounting principle. We've got Novatek is a publicly traded manufacturing company. On January 1st, 2024, they decided to change their inventory costing method from the FIFO to weighted average. Management believes that the weighted average method provides a more appropriate measure of the cost of goods sold given the nature of their operations. Okay, so then you have over here retained earnings under FIFO. The dividends that were paid. And then now let's go ahead and ask what we're being asked to do. So ignoring all income tax effects, we're going to go ahead and prepare the journal entry on January 1st, 2024 to record the change in accounting principle from FIFO to weighted average cost. Then over here, comparative retained earnings statements, prepare the comparative statements for 2022, 23, 24, reflecting the change in accounting principle using the retrospective approach. And then lastly, we're going to have our disclosure. So let's go ahead and jump on this right over here. Okay. So we've got over here, and just give me a moment. So what I'm going to do for this particular question is take a little bit of a different approach. And so the approach of what I'm going to go ahead and do is I'm going to go ahead and make new comparative retained earnings statements. And for 2022, 2023, using the retrospective approach. So we'll go ahead and start on that with this particular one. So if we go ahead and start making the new retained earnings statements. So over here, 2022 as restated. So it's a little bit smaller. Okay, so we have here the beginning retained earnings. And this was under FIFO was 3.2 million. And when we're doing this as of 1/1/22, so here we have basically one period that we have not gone through and have dealt with, which is essentially the net income, this part right over here. So what we're going to go ahead and do is because we're trading from FIFO to weighted average, my net income is dropping by $70,000. Okay, so over here, basically my adjustment for the change in accounting principle is going to be over here. It's prior period adjustment of 70,000 because if my net income was 850, it should have been 780. So that under days if I was using weighted average, so my beginning balance is not correct. Why is this a prior period adjustment? Because I'm starting to go through and make this adjustment as of I'm showing financial statements for 2022. So this is where I'm going to go ahead and start. So my beginning retained earnings as adjusted is going to be 3,130,000. So then I'm going to go ahead and say my net income under weighted average, right? Because that's going to be my new method, is going to be 840,000. Okay, so this again, would not write this, but I'm writing this so we kind of know the distinction. Less dividends. So my dividends in 2022 were 150,000. So now my ending retained earnings is going to be my beginning retained earnings as adjusted plus the new net income under weighted average of 840,000 less the amount of dividends, and I get over here to 3,820,000. So for 2023, again, this is going to be as restated. Very, very important because we are going through and restating this, we're restating prior periods. So my beginning retained earnings is my retained earnings from the prior period. My net income under weighted average for 2023 would have been 710,000. My coming back over here, effectively my dividends paid in 2023 were 200,000. So my ending retained earnings is going to be my beginning plus my net income less my dividends, and I get 4,330,000. For 2024, my ending retained earnings becomes my beginning. My net income is going to be 950,000. And then over here, my dividends paid are going to basically be at 250. Okay, so again, my ending retained earnings is going to be my beginning of 4,330,000 plus my net income minus my dividends for 5,030,000. Okay, so that is prepare, compare, retain earnings statements for 2022, 23, and 24, reflecting the change in accounting principle using the retrospective approach. So again, we're restating these parts over here. We've adjusted the beginning balance. Now, I did this kind of intentionally because I just wanted to kind of share with you, okay, the difference between the inventory balance under FIFO and under weighted average is basically going to be right over here. It's going to essentially be the sum of these three different parts right over here or at 220,000. And this is what we have to go through and prepare this on January 1st, 2024. So what I need to kind of go through and basically figure out is to say, well, which way is retained earnings really going through and going? And to do this, you don't have to do it this way, but to do this, I want to kind of look at my retained earnings through right here and kind of see what happened under the old method. So in 2022 and 2023, prior to any restatement, what did my old versions look like? Okay, so basically my old version over here was basically going to be my beginning retained earnings of 3.2 million. Okay, then I have my net income. My net income under FIFO is going to be 920,000 less my dividends. My dividends over here were going to be at 150. So my net income right over here is going to be 3.2 plus 920 minus 150 or 3,970,000. Then my ending basically becomes my beginning. My net income under FIFO for 2023 would have been 780. My dividends under FIFO, my old FIFO would still be at 200. And then I'm going through over here and computing these. And I'm getting 4,550,000. If I compare 4,550,000 to 4,000,000 for 330, I'm getting a difference over here of $220,000, right? So effectively, this is the change of retained earnings. Now, if I look at these two balances here, right, I get, if I take 640 minus 420, I get that same 220,000. That's where it came from, this change in accounting principle. So because my retained earnings is lower, I'm going to go ahead and debit retained earnings for 220,000, and I'm going to credit inventory for 220,000. Now, when I go ahead and do this, this is effectively getting me to my result. But the reason why I wanted to take this time to kind of show you, why did I go through and do this under the old version to basically compare it to here, right? So my old version, my ending retained earnings was 4,550,000. My new version ending retained earnings is going to be 4,330,000, or this difference of 220,000. So effectively, what I'm doing is I'm lowering my retained earnings. How do I lower retained earnings? Well, when I look at my accounts, assets equals liabilities plus owner's equity, debit, credit, expenses, revenue. This is why it's so important that you're using T accounts. Owner's equity is a credit balance, will have a credit balance. It's increased by credits, decreased by debits. If I'm reducing my retained earnings, I'm going to go ahead and debit my retained earnings. And by doing this, I'm effectively basically getting my inventory balance lower, which is what I wanted to do. I wanted to go from 640 to 420. So effectively, that's how I would go through and make that the journal entry to report the change in accounting principle for FIFO to weighted average cost. It's just kind of like a proof of life. Okay, so that is the solution to the journal entry. I would suggest doing the statement of retained earnings first, and then going back and doing any kind of journal entries you need to do. Again, it just kind of depends on the problem that you're being given. Now, for disclosure, list the 4 major disclosure requirements that Novatek must make in its financial statements as a result of this change in accounting principle. So effectively, what they have to go through and do is they're going to have to explain the reason of the change of going from FIFO to weighted average cost and the justification why that new method is preferable. So again, it provides a more appropriate measure of cost of goods sold given their manufacturing operations. You could also say it's in more of an industry standard. The method of applying the change, it was applied retrospectively, because again, we're going through over here and saying as restated, very important, including a description of the prior period information that has been retrospectively adjusted. Effect on current period financial statements, effect on the change of income from continuing operations, net income, any other line items, and earnings per share data. So if you're taking my class, I'm not going to get into making you do this. If you're taking my class, I'm really going to be focused on these 2 parts right here, right? The disclosure parts, it is important, but as far as doing this during a normal exam time, yeah, so that's going to be rough to do. And then lastly, the cumulative effect on retained earnings, cumulative effect on the change of retained earnings or other components of equity is the beginning of the earliest period presented. So here's where we're going to be showing our adjustments. And again, I'm ignoring all income tax effects for simplicity purposes. So I want to thank you for joining me here today on this question overview for a change in accounting principle. Thank you for watching. Please like and subscribe. Feel free to leave me a comment, or feel free to send me an email to ibc30cpa@gmail.com. I look forward to seeing you on the next video. Have a great day.